Only thing to be doing this morning, again, raising cash. That's the cash position in US dollars. And the other idea I pop in there is Big Ben. So Ben was down on a sell side downgrade on Friday. I wrote about this in the early look note this morning. What I'm going to be paying attention to most, the sector most likely that I'll buy first on the correction. And again, you want to be buying on corrections, you want to be selling on rallies, is going to be the financials, and Ben Franklin is, again, one of our top ideas from Jonathan Castellane on that front. There's a rate hike last week, so on the news, bond yields stopped going up, the dollar stopped going up, they correct, but they remain bullish from a trade and trend perspective, and that's the intermediate term call. So provided that we're right on growth, that's why not only would I be raising cash, but I'd be buying dollars. So again, we like the dollar, we don't like bonds, we don't like long-term bonds, we don't like utilities. Our range is calculated using price, volume, and volatility. So when the ranges are narrowing, that's very bullish, because what the market's saying is that on a probable basis, your corrections, when you get super narrow, I mean, there's nothing left. And then guess what happens? This thing starts to go like this goes like this, it starts to widen out a little bit. Then you actually get a real move. A correction within a bullish trend, okay? But a narrowing range, by definition, the way that I calculate it, is always bullish for whatever that is. Well, J&K, I would not like. Junk is highly correlated to what's happening in high yield OAS or high yield spreads, and high yield spreads have been both ways. Both in terms of high yield spreads coming down and going up have been highly tethered to what the oil price is doing. So you got to be very careful on that. That's why I've not been. There's a nice shiny lure there. Stay with the fishing theme. There's a nice shiny lure that we can use. Higher yields and buying junk bond yields. But for now, I especially those components of junk, I don't want to touch. Because there's so much paper that, so many paper, like Wall Street, bankers issued paper, secondary stock, debt to paper over this energy bubble that crashed down on the rocks and then was resuscitated. But it certainly didn't change the dynamics of the oil market. I mean, the reality is that there's an oversupply situation and the price is bearish from a trending perspective and a tail risk perspective.